What's up everyone? Welcome to my first video where I want to go over a simple trick that once I applied took my win rate over 70%. Now this is to do with market structure shifts as you can see here and here, and it's a simple way to tell which shift is actually going to hold. A lot of you might find that you're trying to short from an FEG here, and a lot of the time it may come down like this and then end up taking the stop loss at the high, rather than one like this where it comes down, retraces to the FEG, you short from here and then ride it down. There's actually a very simple way to determine which shift to use and which shift is a false one, which you don't want to trade. Um, Make sure you drop a like and subscribe because I've got plenty more content on the way and plenty more tricks to help you improve your trading. Now we will be going over ICT's 2022 YouTube model. And if you don't know anything about this, I recommend heading over to his channel and finding more about it. At least learn the basics before coming back to this video. Um, I can give a short summary. So basically, we're waiting for price to trade into a higher time frame PD array, such as an FEG or maybe an order block on the 4 hour for me. I classify as higher time frame, the 4 hour or the daily. But we wait for price to come into there, and then we wait for a shift on the lower time frame, maybe the 1 minute or the 5 minute, whichever you feel comfortable with. Uh, and once it breaks a swing low here, we wait for a retracement into an FEG, and it has to be in a premium market, and we wait for it to trade lower. Obviously, in this example, this is a false trap, and we'll just liquidate you at the top. We want to look for one like this where it comes down, goes up and then breaks lower, retraces before heading lower to maybe some liquidity down here. Now I found a perfect example of this the other day on Euro GBP. I usually don't trade this pair, however, DXY, which is the dollar index for those of you who don't know, has been stuck in this area for a while now. I like to trade moves like these where we're heading lower or heading up towards an area of liquidity. It just makes it a lot easier to trade and you can catch nice moves. But while we're in here, I'm not interested in dollar pairs. So I go over to the exotics. I was on Euro GBP and we had a swing low here, came up and took buy side liquidity, took these equal highs on the daily before breaking lower past this. As we left this daily FUG, this became my area of interest. I wanted to see us trade into it like we did here and then break lower before taking out sell side liquidity down here. So if we head down to the 5 minute, this, as you know, is my daily FEG. On Wednesday the 3rd of May, New York open at 7 a.m. We created a low here, came up and took these equal highs. When we came back down, I wanted to see us break this low with speed and distance. So as I spoke about earlier, I want to see it maybe come down to here and then retrace before heading lower. I would have taken shorts, however, we only just wicked below and never moved lower than that. So as you know, a lot of people would have taken that sell when we retraced up into maybe this FEG here. Let me just mark that out. When retracing into this FEG here, a lot of people would have sold from this point because it looks like the 2022 model. However, maybe aim for some lows down here, I'm not sure. However, it isn't because we only just broke it. There's no speed and distance, you would have got liquidated. So we sit on our hands, we be patient, wait for price to make a nice move. As you can see, we continued up, took out this buy side, and then as going up, we made a low here and then a new high. This is now, every time we made a new low, it was my, area of interest. I was waiting for it to get broken as I was expecting lower prices. Right here, we made the low, came up and then broke down. And look how far on this one we came before actually coming up into an FEG. Compared to this one, look, this low came up, down, barely moved past it. You would have got liquidated at the top and then keep going, made a low, high. Look how far this one is compared to that. So I felt confident on a retracement into this fair value gap. We got it, and I took sells here from this point. As soon as we retouched the fair value gap, I put my stop loss above this high, and then I aimed for, I had these equal lows here, which is a nice target, 1.1 to 1.5. We're not really aiming for anything crazy on these. I don't try aim for anything much more than 3R, but you could have easily gone for this discount FVG here as a target. That would have been a good target. A nice 1 to 2. You can't complain about that. Now we are on NZD-JPY. Again, an exotic pair since DXY has not been clean. So I marked up this as sell side liquidity down here. And on Wednesday, again Wednesday the 10th of May, London session, we instantly ran up and took out buy side liquidity at this high. Now, as you all know, the premise of the 2022 model is waiting for a high to get taken before looking for the model. This happened here. We ignored all this as there was no breaker structure here. Came down here. This was where my interest lied. At this low, we had a shift, came right down again with speed and distance. Now this is a perfect example of me blending the model into the same model on a smaller time frame. So left this FEG here, and then what you could have done, of course, this is the model in itself. Took a sell from here, stop loss above there, and then aimed for the sell side liquidity, which would have been again nice 1 to 2 on the 15-minute. However, what I did was I took the 15-minute fair value gap and then zoomed into the 1-minute and waited for price to react off of the fair value gap and hunt the same market structure shift and fair value gap that we look for on the higher time frame. So the same model just blended into a different time frame, and as you can see, price traded into here, traded into the fair value gap. We left a low, came up, failed to break the swing high here, which counts as a failure swing. So I was already anticipating lower prices when we did that. Broke lower with speed and distance past this low. I'll mark that up as the shift. And then left this fair value gap here. Now I took sells from here, and you might be thinking price came really close to my stop loss, and it did. However, because I placed my stop loss above the intermediate term high rather than the short term high, we didn't end up get liquidated, and I aimed for this low on a 1 to 3. Nice 1 to 3 here. Usually, if you had just stopped here, you would have got liquidated. However, because this was a short-term high, I didn't want to place my stop above there. So instead, I placed it above the intermediate term high, where we have a short-term high and a short-term high, which made it classify as an ITH. Took them sells and rode it down. So yeah, that's another example of how you can take the model, blend it into 2 different time frames for a better risk to reward. If you really wanted to, I don't usually swing trade, but of course you could have took the lower time frame model, placed it into the higher time frame like we did here, and then aimed for also the higher time frame sell side liquidity. But I don't swing trade, and I don't recommend you do, especially if you're new. It can be hard to hold through all of this sort of price action, up and down, up and down. So yeah, I hope you guys found the examples useful and learned how to differentiate between a fake market structure shift and a real one like this. Hopefully this too improves your win rate as it did mine. Make sure to follow me on Twitter and Instagram. The @ is the same as it is on my YouTube. Like and subscribe, and I'll see you soon.